Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 16th October 2020. In the international market, Paris and London have both instituted limits to social activity in a bid to contain the spread of coronavirus. In US economic data, weekly jobless claims data climbed 53,000 to 8.98 lakhs, the highest level since August 22. Rising global infection rates, a setback in the vaccine trials, and anxiety over an election outcome. These are the three reasons which will continue to keep both equity and debt markets volatile for near future. US 10-year closed at 0.74 and 30-year closed at 1.52 percentage points. German 10-year closed at minus 0.59 percentage points, the lowest since mid-March due to uncertainty on US fiscal stimulus and rising COVID-19 cases in Europe. In the crude oil market, OPEC Plus reassured the market yesterday that they will not let oil market to crash again. Member nations were also hopeful to increase the production in oil from January as it was decided early, even though COVID-19 continues to rattle the economies. Brent, on the other hand, is trading at $42.95 per barrel with a long-term view of $50 per barrel in next 6 months. We maintain our stance. In the currency market, dollar index is trading at 93.78. Did you notice that yesterday's upper trading range was 93.85 and DXY exactly closed at 93.86? Again, this is not a bright guess. It's actually the mathematical models working behind to predict as accurately as possible. The risk of approach is helping the US dollar. US dollar range for today seems to be 93.57 to 94.20. USDINR with a high of 73.47 closed at 73.43 on Thursday. Point to note is USDINR has not breached 73.50 even on intraday basis yet for the last few weeks, which may happen today. USDINR range for today seems to be 73.20 to 73.55. All of our clients are minting money in USD-INR pair due to its strict range-bound movements, and it has become a heaven for currency traders for now. In the domestic market, the central government has revised its borrowing plan. Initially, the center had planned to borrow 4.34 lakh crore in H2, but now it has been revised upwards to 4.88 lakh crore. The additional borrowing will be to compensate states for the GST CESS shortfall. The additional borrowing will come in 3 and 5 year maturities. Hence, we will see an uptick in yields in 3 to 5 year maturities due to rupees 55,000 crore additional supply. But RBI has promised to keep the liquidity in check and heavy OMOs to address these concerns. We do not worry much on the 3 to 5 year maturities. Let's do the analysis for yesterday's 15th October 2020's rupees 20,000 crore OMO. The meaningful observation was 579 GS 2030 cutoff was at 586 or 99.48 with rupees 3,475 crore purchases. The quantum in 10-year maturity was less than anticipated. The cutoff was also as per our yesterday's prediction of 586, and there was not much to cheer as RBI was not so aggressive and sent a signal that they are comfortable with the current rates. RBI is trying hard to shape the yield curve with large purchases in 2026-27 maturities, which was seen in yesterday's OMO as well. Today, there will be a GSEC auction and we will be available again with our cutoff ranges by 10:30 a.m. If you haven't subscribed to our trading services or auction services, you can reach out to us on 9930307466 or research at nightfintech.com.